Welcome back to the channel. I'm Doug, the retirement guy, and today we're diving into one of the biggest tax conversations that retirees and pre-retirees need to understand, and that is the Roth IRA conversions. We're going to give you the 6 major reasons why converting from a traditional IRA to a Roth may make sense. And just as importantly, we're going to cover when absolutely not to convert because it'll cost you more in taxes than you think. This is a powerful tax planning strategy, and when used right, it can potentially save retirees thousands of dollars over a lifetime. This one actually came from a couple different questions from our YouTube family, our YouTube subscribers. They've asked this because it's the time of the year to make the switches. So we wanted to go ahead and cover this, but before I do, I want to make sure everyone understands you should always be talking to a tax professional, a licensed financial advisor when making any of these changes. But before we jump in the video, I got to do a shout out to all of our Patreon, our YouTube subscribers. You guys, welcome back to the channel. And all of our now YouTube members. Thank you so much for supporting the channel. I know it's 99 cents. I know it's up to just a few dollars here and there, but it makes a big difference. Thank you from the bottom of my heart. Thank you. Let's get started. Well, we got to do this before we dive in. We got to do a quick but important disclaimer. Past performances do not guarantee future results. Everything in this presentation is for educational and informational purposes only. I am not a financial advisor, and this is not financial advice. Your tax situations may be different and completely different from someone else's, so always contact a licensed tax professional or a financial advisor to make decisions. So before we talk about conversions, let's quickly review the key differences between a traditional IRA and a Roth IRA. A traditional IRA gives you upfront tax deductions. The money goes tax deferred, and you pay taxes later when you withdraw the money in retirement. Now, starting at the age of 73, you are required to make required minimum distributions, or better known as RMDs, whether you need the money or not. A Roth IRA, on the other hand, uses after-tax dollars. The money grows tax-free, and qualified withdrawals later are also tax-free. And the best of all, the Roth IRA has no RMDs during its lifetime. So when you convert from a traditional IRA to a Roth IRA, you're essentially choosing to pay taxes now and in exchange for a tax-free income stream later. Think of it this way. Do you want to pay taxes now or pay taxes later, potentially at a higher rate? That's the key strategic question behind Roth conversions. So let's start with reason number 1, tax-free growth with withdrawals. So the reason number 1 to consider a Roth conversion is a tax-free growth and a tax-free withdrawals in retirement. Once your money is inside a Roth IRA and you meet the requirements, everything grows tax-free. And everything you take out later is tax-free. That means no surprises, no tax bills hitting you in retirement. This also helps you avoid unnecessary taxes like Medicare surcharges, because Roth withdrawals do not count towards your MAGI. And here's another pro tip. If the market drops, that can actually be one of the best times to do Roth conversions, because you're converting a smaller amount and paying taxes at a discount. When the market rebounds, all the recovery happens inside your Roth is completely tax-free. This is why this is probably a great time to be investigating and doing this with the markets down as they are. Number 2, and the reason for number 2 is more control over your retirement income. You have greater control of your income in retirement. Traditional IRAs force you to take required minimum distributions at the age of 73. Even if you don't need the money, you are forced to withdraw it and pay taxes on it. But with a Roth IRA, there are no RMDs during the lifetime of the plan, which means you decide when and how much you want to withdraw. You have control over your own money. Flexibility is huge for tax planning. You can control your taxable income year by year. Just remember the withdrawal rules. A Roth IRA must be open for 5 years. And you must be 59 and a half or meet the qualifying exceptions for tax-free withdrawals. So planning strategically and can dramatically reduce your tax bill in retirement. So when you make these changes, remember that 5-year rule. So if you are not going to need this money for 5 years, you're okay. If you're going to think you're going to need it sooner, you better plan accordingly. Now, taking advantage of the low tax brackets. Reason number 3 is all about locking in lower tax rates. If you are currently in a lower tax bracket, such as an early years of retirement, a year with reduced income, or maybe a year before your Social Security kicks in, this may be a perfect time to do a Roth conversion. You're essentially prepaying taxes at a discounted today so that you are avoiding paying taxes at potential higher rates later. This is why timing matters. We are currently living in one of the lowest tax rate periods in U.S. history. Many analysts believe rates could rise in upcoming years. So doing a conversion strategically at the end of the year can help you maximize the benefits before you have a clear picture of your income and know exactly which bracket you fall into. This is why everyone's been asking these questions. It's the time of the year to do it. And it may work for some, it may not work for all. So number 4, avoiding RMD taxes. The required minimum distribution beginning at the age of 73 for traditional IRAs. And if you fail to take them, the penalty is enormous. It's up to 25% of the amount you should have been withdrawing. So these forced withdrawals can push you into a higher tax bracket. You can increase your Medicare premiums. You can reduce your Social Security tax benefits. You can limit your tax planning flexibility. But with a Roth IRA, none of this applies. The Roth IRA has no RMDs, and your money can sit there and grow for as long as you want. This is one of the big advantages converting to a Roth. I say it again. You have full power over your money, not the government telling you what to do. So number 5, the sweet spot. The number 5 reason is something that financial planners all call the retirement sweet spot. This is typically the period of retirement before you start Social Security, before pensions or annuities are paid out at the beginning, and when you have the lowest taxable income of your life. These low income years offer an incredible opportunity to convert IRA assets into Roth at extremely low rates. During this window, you can fill up your lower tax brackets and pay much lower taxes than you would later once income from Social Security, pensions, or RMDs start to kick in. This is one of the biggest opportunities for retirees to have today, especially given the low tax rate environment. Now, number 6, this is one I hear a lot about from our viewers on the channel. The reason number 6 is legacy planning. If your goal is to leave money to your kids, grandkids, loved ones, converting to a Roth IRA can provide huge advantages. Traditional IRAs, the inheritor are always taxed to the beneficiaries. That means they will owe income tax on whatever they inherit. With a Roth IRA, the heirs receive the money, including tax-free. They must empty the account within 10 years under the IRS rules, but they can let the assets grow tax-free during the period. So for families, this is one of the most powerful estate planning strategies available. So if you're looking to leave money for your kids, your grandkids, your loved ones, take a serious look at your IRA switching to a Roth. Now let's get to the other side of the fence. Now, before we all just rush out and convert everything we got, you need to talk about when should you not do a Roth. And there's some real big flags here. There's some real big winners that you have to understand. Number one, you can expect to be in a lower tax bracket in the future. If your income will go down substantially later on, paying higher taxes now makes absolutely no sense. You don't have the cash to pay the new tax bill. If you're forced to use IRA money to pay the conversion tax, you may trigger penalties and reduce your savings, your retirement savings. You need the money within 5 years? Well, unfortunately, the 5-year rule applies. If you're under 59 and a half and need access to the converted funds, you're going to pay penalties and taxes. So you need to make sure that you don't fall into one of these three categories. A Roth conversion is not one size fits all. You must evaluate your personal tax situation carefully, and qualify tax professional can help you with each and every one of these steps. So the key takeaways and the next step. So let's wrap this up. Let's make this simple and easy for you. Roth conversions offer long-term tax-free growth with withdrawals. Strategic timing can dramatically reduce your tax burden, and the current low-rate environment that we're currently in has a strong opportunity. Roth IRAs eliminate the RMD distributions, the required minimum distributions, and the conversions can create powerful tax-free inheritance benefits down the road. Next steps, I'm telling you right now, is to talk to a qualified tax professional. Calculate your actual tax impact, review your future tax rate exceptions, consider whether you're in retirement sweet spot, and decide if paying taxes now aligns with your long-term growth. Roth conversions can be very fantastic strategy, but only when you do it right with a clear path and proper timing. So, in full, I hope this has helped you guys out. This is something that this was for, I hate to say it, but probably 5 or 6 different YouTube subscribers. We will do what we can to help you if you have questions at any time. So leave a comment down below. If you like this video, if you like what we're doing, let us know. We can continue to try to help you grow your portfolio.